Hello everyone, I'm Dr. Jessica Woolworth, a practicing CPA and an accounting professor. Today, let's talk about the difference between cash and accrual methods of accounting. Have you ever wondered why some businesses seem to delay income or speed up deductions? That all depends on their accounting method. And today we're comparing the two big ones, cash versus accrual. Let's start with the cash method. The cash method is simple. You report income when you get the cash, and you deduct expenses when you actually pay them. Some advantages of the cash method is it's easy to understand. It matches your bank account activity, and it's ideal for freelancers and small businesses. Let's look at some examples. If you invoice a client for $2,000 on December 15th, 2025, and they wait to pay you until January 10th, 2026, if you're using the cash method, you report the income in 2026 when the money actually hits your bank account. Now let's say you get a bill for office supplies on December 20th, but you pay it on January 5th. The cash method result? You deduct the expense in 2026, not 2025. Now let's look at the accrual method. The accrual method is about when the income is earned and not when the expense is incurred, not when the cash changes hands. Some advantages are this better matches income with related expenses, it's required for larger businesses, and it follows GAAP more closely. Let's take a look at those examples again, but using the accrual method. So the same invoice, $2,000, billed on December 15th, 2025, but paid in January 2026. For the accrual method, you report the income in 2025 because that's when it was earned. Office supplies received in December but paid in January? For the accrual method, you deduct it in 2025, the year the supplies were received and used. So why does this matter? Here's why choosing a method is important. With cash, you have flexibility to delay income or accelerate expenses just by timing your payments. With accrual, you match what you earned and spent, regardless of cash flow. So basically, it's about timing. So can you choose which method you want to use? Yes, you can, but only if you qualify. To use the cash method, your business must have average gross receipts under a certain threshold, which was $31 million for 2025, not be a tax shelter, and if you're over that limit or have inventory, you may need to use the accrual method. So as a final wrap up, the cash method equals when the money moves, and the accrual method equals when the action happens. Just as a quick tip, if you're startups in a service-based business, you'll often begin with that cash method for simplicity, but as you grow, you should be ready to switch. I hope that clarified the difference between the cash and accrual methods and why it matters for your business. Do you have a tax topic you're curious about? Drop it in the comments. I might cover it in a future video. If you found this helpful, feel free to like, share, or follow, depending on where you're watching. And just a reminder, this video is for informational and educational purposes only. Every business is unique, so be sure to consult with a qualified tax professional before making any decisions about your taxes. Thanks for watching, and I'll see you in the next one.